Here we are looking at the markets. Some of the US indices are pushing higher, while Gary Glover's looking at the Australian market to find where the great opportunities are. He's noticed that healthcare is doing something that it hasn't done for quite some time. He's going to unpack what that is in the broader context of what the market is doing, and then also highlight where we should be looking within this healthcare space and the specific triggers that he's looking at in his own portfolio and for clients. Good morning, Gary. How are you?
Doing good, Chris.
So we've seen the markets on a bit of a tear. That volatility is definitely there, but it's broken out to the upside. If we're looking at the NASDAQ chart, that's a pretty solid move that's just happened and surpassed that previous high. Two things. What's your interpretation of that happening there? And how does this fit in with the models and seasonality of what can and does happen at this time of year, whether it's a 4-year presidential cycle, 60 or whatever it's showing up as at the moment?
Yes, I mean, like obviously if you talk about election years, typically pretty robust years, don't have big corrections there. Typically it's sort of around that sort of 7 or 8%. I think a lot of the sort of larger corrections there. So just don't get big pullbacks there. You do get a bit of a congestion there. Usually sort of somewhere in the middle or, a bit of a grind there, but this is not really grinding here. This is kind of almost accelerating here. So it's showing, looks extended here, just looking at the chart there, but it is pretty strong here. So, I mean, we highlighted a few distribution days there about 2 weeks ago. I think on the S&P it had like 4 distribution days. And then we saw basically the market accelerated upwards and it had 3 big heavy volume days there, which was like wet in the face of that sort of selling. So really, sort of countered that, that potential sort of sell signal there and just kicked on there. So, look, it is, you can get a bit of a messy, and I would expect some sort of consolidation there, but I do know that you just don't get big pullbacks here in these election years. And particularly the second half of the year is often pretty robust as well, particularly towards the end. So, you can get a bit of a pullback into August at some point, Chris. That's probably one of the months that sort of does tend to sort of drag down in election years and also in sort of fourth years. So it has defied some of the normal cycles there, probably follow the 60-year cycle the closest there. But yeah, we might get a little pullback there into August there, but market's pretty robust. I know it looks like a lot of stocks look pretty extended here, but not showing strength there really. Just saw on the XJO, we've had a few sort of pullbacks there. It's probably interesting to look at the XJO because, every time the market sort of sold off there, although like most of the other indices that have sort of gone back and retested the old high, had a little congestion under that, and then they went through, they either basically accelerated and came back and sat on top of the high and then went much higher, or they just went straight through and kept going much higher. So we've sort of been grinding away here, not really that strong here. So, but the thing I do like here is that every time the market's pulled back, there's been, the volume has stepped in. So we've had a pullback in the market. So kind of as the market gets higher, the volume sort of peters out and then it pulls back, comes back to say 200 points. All of a sudden we saw some buying step in. Then we had that 300 point drop there a couple of weeks back. It was a clear sign of buyers stepping in after that pullback there. So anytime we're getting it, although we're probably losing some momentum at the higher end, we seem to be sort of getting well bid on any pullbacks there. So it's definitely still money on the sidelines here, looking to buy these sort of dips there. So, I'm sort of now starting to lead here to a breakout on the upside, Chris, rather than another retest down here, just because we're sort of every time we've had a bit of a dip, there's just clear signs of sort of buying strength there. And, maybe some other sectors can do some lifting here. It feels like resources have had a bit of a cool off and pull back here now. So they've got the potential to maybe sort of step in there. So oftentimes when you see the index maybe sort of go sideways there, you want to see some rotation there. Some of the hot sectors probably cool off a little bit. Everything else can sort of do a little bit of lifting. And if they sort of, the index manage to hold, some of the sectors sort of come back and pull back a little bit, then they can rally again and lift everything else higher as well. So, to me, the banks look really over expensive there, and they do carry heavy weighting there. So they're probably the one that's the clear, probably maybe vulnerable to pull the index back here. But now with resources coming back here, and I think healthcare names we saw in the last 30, some of those medical imaging, just a lot of medical stocks. We've seen a few biotechs and just a few health names sort of sneak in here. So I just think that the healthcare index is pretty interesting. If you look at that XHJ, it's a really interesting chart there because we're sort of, healthcare's pretty much gone sideways since sort of COVID began, which is, you probably think the opposite there would think would be raging ahead here, but it's probably the sector's really sort of cooled off and we've gone through a bit of a corrective pattern through that whole process there. The thing I do like is that the rally out of that sort of October 23 low has been really impulsive and pretty decent volume. Now we had a little tight consolidation and it just looks like we might just be permeating through the upside of that name. We've just seen lots of the healthcare names. Seen CSL sort of Cochlear, being pretty firm now. I think Bishop Piper's been pretty firm. Just starting to see Sonic Healthcare sort of bounce off a bit of a key level. Just a lot of the stocks in the sector just seem to be sort of coming alive here at the time here where we've already had a run and a consolidation, and now we're sort of making this sort of another break here. So just lots to like there from what I'm seeing here.
Okay, well, you do have those healthcares, and we'll jump into those in a little bit more detail in a second. We skipped over, so there's the XJO. Was there anything different on the S&P 500? You talked about the NASDAQ, or is this 500?
Probably the big thing here was probably just to keep an eye out on those sort of on the 150 and the 161.8 there. Probably the 150 because we did pull back into that 50% zone in October this year, in 23. So that did sort of bounce off the 50. So that sort of tells us there maybe 54.80 might be a level just to keep an eye on. Oftentimes the 61.8 is a lot more prevalent for the S&P 500. So the XJO is going to have it of coming back to the 50% level and expanding 50%. As often as the XJO does that, the S&P 500 has a stronger habit of going to the 61.8, coming back 61.8. So that's definitely the number which comes up a lot more often on the expansions there for this index there. You can even sort of see it on the way down here as well. Like see that the 22 to 23 market there. See how the 61.8 on the way down ended up marking that sort of what August sort of high there as well. So it's just sort of, it just shines up a lot more on the S&P 500 that level. So just below. So just a couple of resistance levels to sort of keep an eye on there. So, but I think I think we're probably due to hit some resistance there soon. But at the moment, this thing's sort of winding up. It's not showing too much weakness here. So I think it's likely to push higher in the short term, hit some resistance here, whether it's 54.80 or 56.35 there, and then probably go through a cool off there. But again, I don't see big cool offs here as well. So you're probably just going to go through a bit of a corrective pattern there. Maybe just sort of something, maybe the same sort of size move that we've just had there. So that pullback there that we had sort of into April, May, we'll probably see something probably won't see anything larger than that. So probably push on higher here, then have a correction, probably the same sort of size there. And then I think you'll probably just see corrections that size or smaller here for the remainder of the year here. I just don't see weakness there. So, but some stage you'll get some sort of consolidation there, but it's still pretty robust there.
Okay, so that's a good thing to look forward to and a bit of a marker on the horizon for those looking to trade the indices and use that as an overarching weighting for the portfolio of what they do. If we go down the next layer, look into the portfolio, look into the Aussie exposure, we are looking at healthcare this week. You did mention CSL, and we just a couple of markups on that chart there.
Yeah.
What you just described on the healthcare before, just highlighted here on this bit of a flag, you set out of the October 23 lows to a bit of consolidation to where it is. We know CSL is a heavy weight on the Aussie healthcare index. So we're zooming in here now into the weekly chart, the monthly that you had on the index. We've had this rise.
Yeah, big impulsive move, really, really strong impulsive rally. And then we've come back in three waves, tightened up here, probably come back about half the range. And then we'll see what's the think in the last 4 or 5 weeks here, I've seen a pretty decent block of volume as well. So definitely saw some robust volume sort of stepping in here after this has had a consolidation there. So again, if you just look at momentum names there, Chris, we know that we see that explosive move, and we see the pullback, the cool off, the consolidation, the tightening up, and we're looking to basically enter on those sort of on the breakout there. And so this is breaking out here. The volume's pretty robust there. So sort of like, sort of classic sort of sign there. I mean, this is almost like, remember we talked about the, Weinstein sort of, coming out of a stage one, how we sort of once we break out, come back and retest the old high and then go again. I think we had that set up there, and probably might have been December, sort of January 23 there and stuff there. So we basically broke out of the range, come back, set on top of the high, and then went back. And that's basically the I think Weinstein refers to that as the the ideal trade there. So then you're moving out, you're all breaking out, the market's moving out, but then you break out, come back, sit on top of the high, and then go again. So, this is the ideal momentum trade here, showing strength, pull back, and then go again on volume there. So nothing wrong with CSL at all. It looks pretty robust there. I'd say if it tightens up, has a little tightening channel there, it'll be probably one that I'd probably look at to maybe come in.
And nice to see it on index heavyweight with something such a large market cap as CSL there. Volume shouldn't really be a problem, whereas quite often these sort of charts that we're seeing on the daily basis, you're looking at them on the 30-30 list and saying, look, good setup, but the caveat is it's hard to trade into liquid. Clearly not the case with CSL.
Yeah.
Other ones within that healthcare space, ResMed. So you've got a few numbers here, 0, 48, 96. So we're talking about time, are we? Is these the markers that are...
Yeah, look, it's probably... I've just left them on there just because they were useful at the time there. But look, we had a nice little basic pattern out of that low. Took a lot of time to build there, but then the whole thing is sort of now it's sort of broken up there. So again, there's a big volume there, accumulation taking place. And then, that's when some people sort of, said some people talking about prices more important than volume, and I agree it is, but volumes, you don't get big moves unless you see big volume taking place, in my opinion. So, but this thing has been running quite nicely, been sitting on top of the highs there. Went through a little bit of a congestion phase there, so the end of 24 where we started to overlap. So it might have been starting to slow down there. I did sort of take the last sort of parcel. This is one of my bigger positions there. In late sort of 23 there, I did take the last parcel off around that sort of 33 mark. But I noticed that since then it's just come back in a pretty tight consolidation press as well. So we've had like 5 weeks there, but we've come back from 33 back to 31 here. But the volumes selling, there's not much selling pressure coming through there. So again, we've just had a nice little tight consolidation. We've actually left some spacing between the previous little swing high and the current low as well. So when we see spacing there, that's when we know we can accelerate to new highs as well. So again, this is a nice strong trend. The last thing on the trend is just another pause here. Left bullish spacing, no aggressive selling going through there after pretty positive volume there. It still looks in a pretty strong position there. And a lot of people feel like it's probably run too far and too hard here, but when they don't sort of show any weakness there, we sort of know that some of the juiciest moves come at their very end. So there's nothing wrong with this trend here at the moment. So it looks pretty robust.
That's a nice one from ResMed. The next one in the same space, Sonic Healthcare, another large name.
Yeah.
Looking a little bit different to CSL. So ResMed and CSL, we could see sort of a copy of what the Healthcare XXJ Healthcare Index had shown on the ASX, obviously large weightings there. Sonic Healthcare, a decent-sized company itself, but not reflecting the same. From the weekly charts, notably different. So what's your take on what's happening with Sonic Healthcare here?
It's funny, I don't normally just sort of trade the fibs, because obviously they can, it shouldn't just rely on those only there, but sometimes you sort of, like you see the sort of some stocks come back maybe 50% or 61.8% of the range. They're quite large corrections on a weekly chart. So there are always levels to sort of keep an eye on here. But we can see here that this stock there, it's come back to the 50% of the range, bounced off of there, come back to the 38.2, it's fallen away through the 50 again, had another bounce, and then But then once it's broken the 50, it's gone all the way back down to the 61.8 and sort of showing some sort of signs there. So really has been respecting those big Fibonacci levels all the way here. So we're just looking for, this is at a pretty deep pullback. I thought the revenue line was pretty robust. Just the, the inflationary sort of cost pressures was the concern there. But I think that can be passed on here ultimately, like every other industry has done so. So I think these healthcare names are sort of some reasonable value there. And if you look at earnings growth as well for the next couple of years there, our forecast to sort of grow. You probably got Sonic Healthcare trading on a lower multiple and a higher yield than CBA and with growth, so that's pretty rare to have like something that does continue to grow trading on a lower multiple than something which got no growth. So there's definitely some value here. Obviously, has been some headwinds. That is a bit of concern for healthcare, but I feel like that, like every other industry, will get passed on. But the main thing there is to see those technical levels there, but we need some sort of proof there that we're going to hold there. So did see some big volume there. There was a little VCP on the daily, Chris, just a little pullback, a little bounce, and then pullback or a bounce, and then it sort of broke up. So sitting below the 50-day moving average, which is not ideal, but did like the tight little congestion near the volume, and you'd wait for a little bit of a, what they call a little B-wave break after a little VCP. And we are sort of starting to move up there. So it looks encouraging here so far. Got a pretty tight stock here, but this stage there, probably be watching that 28.15 as probably the first resistance point, and then maybe something like 32.50 as, if it can get through 28.15, then maybe we can go back up to that old level there. But it looks pretty robust there, with the sector all looking pretty decent there. There's definitely some value there. There's definitely some sort of future growth there. So I think it looks pretty interesting there. And even that, just that 4-year index of going sideways as well. That's that's pretty interesting as well. That's a sector which has sort of been in limbo for 4 years there. So it's still stayed pretty robust. So it still can emerge there. Yeah. So it's still stayed pretty tight there. Really, think that charts and stuff there. So like your stronger names, they have a bit of a cooler, they go sideways, and then they re-emerge again. So it does look sort of solid.
So staying within that space, looking at Sonic Healthcare, then progressing into Ramsay Healthcare. So the hospitals did expand internationally. We did have COVID slowing down, limiting the number of patients, beds, hospital operations, all of that kind of thing that was not necessarily helpful for Ramsay. Turn the corner, reopen, have the catch-up lift, but not necessarily recoup it. And that's showing in the share price here that we had that massive uplift, which was failed movement. But 0, 1, 2, 3, 4, and then a false break. So I take it the false break is catching you right now.
Yeah. We had the potential of a big basing pattern there, Chris. It took a long time to build there. So we got a series of high lows there, and it did basically wind up and get to a new high. But all it did there was go back and retest that 2022 low there and then find resistance there. So that was a little bit of a negative there, hitting the old low and then not being able to break through. And then we've gone to a new low in reasonably quick time as well. But we haven't basically followed through. So we sort of got a classic sort of went to a new low, that exhaustion of volume. The next week we're sort of volume up, big volume sort of stepping in there. We know basically, again, there's like a big basing pattern there. Just trying to think of the Wyckoff accumulation chart there, so we have that sort of downtrend. You have that base building there, and then it looks like it runs, and then it flashes down, sort of makes a spring low, and then away we go. So that's obviously sort of one of the more popular. I think it's the accumulation schematic number one for the kind of Wyckoff theory, you might sort of say, but it is a bit of a classic sort of textbook sort of setup. But I love the sort of false break here and stuff there. So I think there was one sort of a while back there. I think H&M Milk came all the way back down, retested the low, went marginally lower. When they do that, they usually sort of the target is to go back and retest the last sort of swing high here. So in this case there, we're looking at sort of buying this around that sort of $47, $48 mark, and looking for a target to go back up above that last high there, which is around 57.25. So you're talking about a $9-10 rally here. So with a stop maybe less than $1 here and a target of say $9 or $10, that's like a 9.5 to 1 risk reward. So that's a good setup here as well. So the trades I do like here. So let's hope this one works out better than the A2 doesn't shake us out too quickly there. But yeah, it looks interesting there. I like the sector looks interesting as well. So yeah.
Well, the next one coming through, we move from where you are in Ramsay Health Care, looking at Healius. It's more sort of patient services in the sense, healthcare, but unfortunately it's in that same sort of just long downward trajectory and under. You've got the 50-day moving average here.
It's a nasty downtrend there. Yeah, and it's got plenty of gearing issues, been pretty poorly managed there. But look at the volume which has been going on here, Chris, over the last, probably 3 to 6 months here. The volume, it's up here. There's big volume been taking place here. So yeah, it looks like, big accumulation taking place here down the low here. So just starting to squeeze out of that little, what they call the ending diagonal. So up to the time to see that ending diagonal at highs, you can see the ending diagonal at lows as well. We had the little false break again, went to a marginal new low. I think it was like that 1, 2, 3 thrust low. And then we sort of started coming out here. We're building quite nicely. It's not every time, we're seeing some pretty good volume on the way up here. Any sort of down days, we're drill into the daily there. We're not seeing much selling here. So this is sort of looking pretty constructive there. It's one of those ones that I've seen a few fund managers talk about this one, Chris, saying that this has got the potential to double in value if the management can get things going in the right direction. So it's a big if. The big concern there is that the gearing is pretty high. So if you look at the market cap versus the gearing, I think the gearing, exceeds the market cap. So that tells you there's some risk there as well. So, but yeah, pretty interesting one here. So showing some signs of, and then obviously I think they're doing a little bit of structural reshaping of the company. They may be selling some assets as well, sort of trying to simplify the business. So, if they get that done and at a reasonable price, market might like that as well. So, yes, similar to Ramsay. I mean, remember Ramsay had a bit of a jump there once they said they were going to sell a few assets and try and rationalise a bit. So, that sort of led to one of the rallies there, but hasn't sort of put it on with it there. There's talk of private equity coming in and breaking this up here, but that hasn't eventuated either. But yeah, it's definitely some, some opportunities in that healthcare space here, I think. So yeah.
Well, continuing in that theme, so going from Healius into IDX Integral, this is one that you did speak about quite recently, and I like that you've got the cup and handle here. You've got some fib levels, but obviously more applicable to the daily chart, where we have the weekly one on screen here to show that overarching, where the cup and handle sits. So
it's had a nice rally here so far, and then I guess the most important thing is that handle has only come back about 50% of the fib there, Chris. That's where I was probably trying to highlight in there. So as long as that handle doesn't sort of come back too deep and holds pretty tight, then it's in pretty good shape. I think TUA might have come back the 38 fib, and I think the NXL might have come back the 50% fib and then gone on. So some of those couple of handles that have worked in the past there, they sort of usually sort of don't come back too deep there. So yeah, it looks pretty constructive there. I thought it was a little bit of a downer there on Monday there. I think IDX has made a bid for CAJ. The price actually did come up a little bit, but it held the low, and now today it's back up towards the high. So so it could be a bit of could be earnings accretive, that little merger there. So I might be positive there, but again, sometimes when you take over bid, you probably are the one that comes under pressure, and the one that's even though you're saying it's a merger, the one that you're sort of bidding over, that one usually goes up there, which was the case yesterday. But in the end, the market will evaluate whether this is good for each company and good for both of them together. And but so far the technicals are actually holding here pretty well. The fact that it's actually recovered pretty strongly in 2 days is actually a pretty good sign. So looks pretty robust to me. So again, don't get in your own way here. Just let the charts sort of tell us what's going on here. But the price action so far is pretty encouraging.
Well, the last one I liked, the last chart on your weekly report, you've got Cochlear, and then you've highlighted some boxes here. So this tells us, what are these boxes telling us?
Oh, we just sort of knew that this one had some relative strength there early in the years. It's been one of the stronger healthcare names here out of this October sort of 22 low. So I think if you remember there, the market had a pretty deep pullback in December, and it had a pretty deep pullback into March. And in March there, this stock there was showing real strength versus the market. It was actually one of the strongest performers there into that March period, showing real strength versus the overall market there. And we saw, we did pop out of that range, have a pretty nice run there, probably 20-25%. Has pulled back again, set up a little B wave, and then gone higher again. It pulled back again, set up a little B wave, and then had a massive run there, 50% there. So, this thing's the most interesting thing here is if we look at the shape of each trend line, it's actually accelerating. So each trend is sort of getting sort of steeper. So the whole thing is sort of winding up here. So we've had a bit of a consolidation here again, Chris. But again, look at that price action. It's largely a sideways orientation there so far. So it still leaves it at a pretty strong position. So we know from history there, sometimes we see these stocks have these 50% rallies, think, it's gone too hard. But then if it doesn't sort of sell off here, holds the range pretty well. One of the sort of strong names there, still leaves the stock in a pretty strong position to sort of have another leg up here. So, although it looks extended here, history tells us that when a stocks are like this and they don't sell off too much, goes sort of more sideways orientated there, this leaves it in a pretty strong position and sort of have another leg high here. So again, I'll be watching this one really closely there. Look for any little tightening sort of patterns there. And if it tightens up and consolidates, and I think if it breaks up out of that consolidation, definitely one to follow here because it's really, it's still in a very, very strong position overall.
Well, that's a good one to be looking at, and definitely a more positive chart, especially with those rallies that you're showing. And out of the more recent depths of the market low, it was already showing relative strength, which echoes a lot of what you've been talking about in the last couple of months. Again, last night to a Sydney audience earlier.
I'm not sure it's a great reference, but it's basically the NVIDIA of the healthcare sector.
Well, it's funny when you showed these charts and when you highlighted these boxes and the trend lines, I was thinking it's a lot like some of the tech stocks you've been talking about with accelerating trend lines. But it comes back to that relative strength that you were talking about, and you've done presentations on, which we'll have links in below, about the importance of these kind of setups early on when the market is having its lows, showing its relative strength, to be the foundations for these sort of stellar moves that then do occur as the market gains steam. These ones just end up keep leading longer and harder and faster, which NVIDIA has been doing. So
if you look at, I think, sort of Cochlear here, and I think Computershare, the other one that looks kind of similar to this as well. Chris has had a pretty amazing run, and it's going through a bit of a consolidation at the moment. But you look at those longer term charts there, it's still in very strong position there. So you often sort of, people are afraid to buy the stocks that are running the furthest there because they look extended there. But history tells you that those are the names that continue to keep running here. And NVIDIA's probably looked extended here for the last 12 months. And it's still, I think it's gone up 30% just in the last 2 weeks. So, that's what sort of history tells us there. So, stick with the strongest names there, still follow them there, just wait for them to have a bit of a pause. This is definitely one to be keeping a close eye on here because it still looks really robust overall.
Well, we'll definitely be keeping an eye on Cochlear as well as the healthcares that you've mentioned, and I'll be looking at that in the 30-30 list that you talk about later in the week and did last week. So to that point, we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
A whole playlist of the 30-30 list that Gary's talked about on the right, as well as some strategies and some setups like the false break, 0, 1, 2, 3 bottoms, and analysis breakdowns of why Gary does things like looks at the relative strength of leaders in the market lows. Over on the left is his X or his Twitter handle if you want to follow Gary there.